Hello, good morning all to all. This is Kelvin Wong here, the Senior Market Analyst of OANDA Asia Pacific. Welcome to today's Daily Dose of Market Insights. So today will be Tuesday, the 5th of December. So before we start our Daily Dose of Market Insights, let's take a look at the disclaimer slides first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, no financial advice or recommendation for any investment product. And as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right. So yes, before we start our daily dose of market, we call it insights. So these are the key three takeaways that every day that I would like to actually share with you all will be a recap of what happened yesterday, and as well as the short-term technical outlook for today on the broad-based asset classes, ranging from the stock indices, the major FX pairs, as well as primary two commodities market, which is the oil as well as gold. And also to round up, we will actually share with you what are the key events to watch out for today. Okay, so yesterday, what we see over here in terms of the benchmark US stock indices is a profit-taking day. So across the board, we see losses in the Nasdaq 100, the Dow Jones, as well as the S&P. But surprising over here, what we could see is that the Russell 2000 small cap company actually outperformed the market. All right, so if we go to over here, what we see is that the Russell 2000 actually gained 1%, whilst the Dow Jones is almost unchanged, slightly, I would say that's a slight loss of negative 0.11%, but the worst hit was the Nasdaq 100, which is down close to negative 1%, that followed by the S&P negative 0.5%. So all in all, what we could see over here, this is the heat map of the S&P 500. For sure, yesterday's we call it underperformance is being dragged down by the 7 mega cap stocks, where Microsoft, Nvidia, Apple, Google, Meta, all ranging from a loss of more than 1% or more to negative 3%. So the worst hit was Nvidia. So I think that was pretty much I would say within normal circumstances, given the fact that in the last 1 month or so, these 7 mega cap stock has rallied by a fair bit. But most important over here is that what is the key technical levels to watch on the Nasdaq 100 and the Dow Jones Industrial Average, and is more importantly is the short-term trend still intact. So this I will share with you all in a couple of seconds from now. All right, and also some key highlights overnight over here was a kind of a support rhetoric after that post OPEC Plus meeting surrounding the uncertainty among the voluntary oil supply cuts commitment that is among the OPEC Plus members. So bear in mind over here is that the African nation actually does not actually move in line with Saudi Arabia, advocating for much more supply cut heading into at least into the first half of 2024. So there's some support rhetoric coming out from the Saudi Energy Minister, Prince Abdullah, okay, indicating to the press or the media yesterday that Saudi oil production cut led by Saudi, I would say that the OPEC Plus oil production cut could absolutely continue past the first quarter if needed. Okay, so that gives a bit of support on the softness that was actually seen in oil price since the start of this week yesterday, where actually the WTI crude oil price continued to threaten is a 3-month low at 72.40, 72.10 level. Okay, so there's a bit of support rhetoric coming from this Saudi Arabia energy ministers reassuring the market that OPEC Plus oil production cut, this extension could well extend into Q1 and even more further Q1 after Q1 if needed next year. Okay, and also lastly, we will start to see early this morning at 9:45 a.m. Singapore time, which is the release of the privately compiled China Caixin manufacturing PMI data. So that's comprising the services sector in China. So surprisingly, the data actually managed to inch up higher, 51.5 versus 50.4 that was recorded previously. So if you look at the trend of this Caixin Services PMI data, indicate to us that the services sector in China is on the foothold of a recovery instead. All right, but surprisingly over here is that the China proxy stock indices, especially the Hang Seng Index, continue its downside momentum. So sometimes we got to bear in mind that once a very short-term momentum has been intact on the stock market, unless certain levels or has been taken out or has been met, then these short-term elements periods will move in line with the fundamental. So if you look at the current situation in the China stock market, what you can see over here is a sea of red. The Hang Seng Index is down negative 1.7%, Hang Seng Tech negative 2.2%, and as well as the CSI 300 is down negative 0.7%, despite the stronger number coming out from the Caixin Services PMI for the month of November. Okay, so with that, okay, let us take a look at the short-term technical outlook chart starting from the benchmark indices first. All right. Okay, now let me share with you the Hong Kong 33 index over here. Okay, so let me expand my screen. All right. Okay, good. So what we could see over here is that the Hong Kong 33 index is the hourly chart, continue to show further potential downside momentum. So yesterday we do have a short-term bearish, short-term support level at 16,500. So price action has been taken down very clearly today's the first hour of trading during the Hong Kong first hour of Hong Kong stock market trading below 16,500. As well as the hourly RSI is showing no signs of a bearish exhaustion. There is no clear sign of a bullish divergence despite at the oversold level. So right now we will still maintain that short-term bearish outlook on the Hong Kong 33 index that we call in our trading platform or OANDA's platform, with a tightened key short-term pivotal resistance at 16,720. So 16,720 is in fact yesterday's swing high level. All right, so as long as this level 16,720 is not surpassed to the upside, potentially we could see further potential downside on the Hong Kong 33 towards the next support level at 16,100, which is a Fibo extension level of 2 times taken from the high of 16th of November, project to the low of 17th of November, projected it to the 21st of November 2023, and as well as a Fibo cluster over here that I draw from here, project from here. Okay, close to the 0.764 as well, 16,100. Okay, so this is the next support level to watch in our continuation of the short-term bearish outlook on the Hong Kong 33. But however, hourly close above 16,720, then this short-term bearish outlook will be negated to potentially kickstart a minor counter trend rebound towards 17,100, which confluence with the minor range resistance of 29th of November to 1st of December and the former swing low of 13th of November. Okay, so that's the outlook for the Hong Kong 33. Now moving on will be the German 30 index. So the German 30 index continued to trade sideways yesterday. RSIs not showing any signs of a bullish exhaustion yet, still hovering above the 50 level mark. The 50 level mark, yeah. So with that, I will actually tighten the key short-term pivotal support level to maintain the short-term bullish outlook on the German 30 index, taking into account of the former swing high. The swing high of last Friday session, we so close to the median line of this minor ascending channel that is in place since the low of 27th of October. Very closely confluencing with this tightened key short-term pivotal support at 16,330. So as long as 16,330 holds, the next intermediate resistance to watch out for will be 16,500, followed by 16,560. So still maintaining that short-term bullish outlook on the German 30 index. But however, if we have an hourly close below 16,330, then potentially we may kickstart a minor corrective pullback towards the lower limit of this minor ascending channel, confluencing with a support zone at 16,110, followed by 16,050 level, which is the former swing high of 24th of November. Okay, US indices starting with the Dow Jones Industrial Average which we call about from Wall Street 30. So the Wall Street 30 yesterday actually attempt to retest the 36,240 intermediate near-term resistance level before inching down slightly lower. So all in all, right, we could see that over here is that price action on the Wall Street 30 is still pretty much healthy in terms of a short-term uptrend phase that is in place since 10th of November within this channel, ascending channel. So all in all, the RSI also managed to actually start to rebound off right at the 50 level mark, and as well as slightly above this this parallel support line, ascending support line that is at 44 level. So all in all, right, we will still maintain that short-term bullish outlook on the US Wall Street 30, given the fact that there is still no clear signs of a bullish exhaustion that's being seen from a technical analysis standpoint. Key short-term pivotal support to watch will remain the same, 35,930. So as long as 35,930 holds, potentially the next intermediate resistance after 36,240 will be 36,555. However, a breakdown below 35,930 with an hourly close below this pivotal support level potentially kickstarts a minor corrective pullback scenario to test 34,500, 34,490, which also confluence with the minor ascending trend channel support level that is in play, that is right now also at very closely at 35,500 level. Okay, so with that, still maintaining that short-term bullish outlook on the US Wall Street 30. Okay, Nasdaq 100. So Nasdaq 100 yesterday was the underperformer. It came down, tested the 20-day moving average before staging a short-term bounce towards the close of the US session. So that level actually confluenced with the 15,690 level. Yesterday low was 15,692, so exactly at 15,690. So as long as 15,690 holds, potentially we will still maintain that short-term bullish outlook. With the first resistance to watch will be the minor range top at 16,160 level for today. Okay, so still maintaining that short-term bullish outlook on the Nasdaq 100. But however, if we start to see an hourly close later below 15,690, then this short-term bullish outlook will be invalidated to kickstart a minor corrective rebound towards 15,380 / 15,175, which confluence with this upward sloping 50-day moving average. All right, now FX market. So yesterday, the FX market, the dollar actually rebounded yesterday. Why? Because of overall of this dollar strength coming back into the euro dollar pair. So if you look at the euro dollar yesterday, it attempted to continue to shape lower high and lower low since the bearish breakdown of this minor ascending channel support that was in place from 2nd of November. All right, okay, so let's put this in pink. Okay, so overall, what you could see over here is that the euro dollar continue to exhibit short-term weakness. The RSI continue to actually remains on resistance below the 50 level mark over here. No clear signs of a we call it a bullish exhaustion for now. But yesterday, price action managed to survive at the 20-day moving average. Okay, over here. But overall price action seems to me that is still bearish in the short term, given the fact of a series of lower high and lower low that's being traced out on the euro dollar in the hourly chart. So with that, I'll be using 10890 as my key short-term pivotal support pivotal resistance for today. Pardon me, I repeat again, 1.089 as my short-term pivotal resistance, flipping to a short-term bearish bias on the euro dollar, a breakdown below yesterday's low at 1.0815, which is the 20-day moving average, potentially exposes the next support zone level at 1.075 / 1.07, which confluence with the 50-day moving average, acting as a support level. Only an hourly close back up above 1.089, then potentially could see the a resurgence of at least a short-term bullish tone coming back into the euro dollar to test the first intermediate resistance at 1.096, which is the pullback resistance of this former minor ascending channel support level. Okay, so that's for the euro dollar, flipping to a short-term bearish bias as long as 1.089 level is not surpassed to the upside. Okay, sterling pound. So sterling pound expecting to trade within a sideways range, holding above 1.26 figure short-term pivotal support level that we highlighted since late last week. So as long as this support level holds, potentially there could be a retest up towards the range resistance that is in place since late November, 29th of November at 27.30 level. However, an hourly close below 126 figure level potentially will start to kickstart a minor corrective pullback scenario towards 125.20 slash 124.40 support level, which confluence with the 20 and the 200-day moving average as well, this support zone over here. Okay, now moving on, next will be the dollar yen. So dollar yen yesterday, we still maintaining that short-term bearish outlook, but thereafter, looking for potential a minor bounce first. So the minor bounce actually took shape yesterday during the US session at 147.20 slash 147.25. So with that, we'll be still keeping that 148.50. Okay, so let's start it slightly lower at 148.40. So 148.40 will be the short-term pivotal resistance level to watch for today. So as long as this level is not surpassed, we will still maintain that short-term bearish outlook on the dollar yen, given the fact that it's still trading within this minor descending channel that is in place since 13th of November high. So still maintaining that short-term bearish outlook as long as 148.40 short-term pivotal resistance is not surpassed to the upside level. A breakdown below 145.90 potentially could take us down much lower towards the next support level at 144.95 level over here. Okay, 144.95. Okay, so what's 144.95? Okay, it's the lower limit of this descending channel, and as well as on the daily, we could see a very clear key congestion level at this 144.880 level, former swing high of 30th of June 2023 that was retested on 22nd of August and 1st of September at 144.80. So it's very close to 144.95 as well. So I would say that 144.95 slash 144.80 level, okay, after 145.90 is being taken out on the downside. Okay, so that's the next support level to watch. Okay, however, breakout above this 148.40 level will actually invalidate our short-term bearish outlook to see a squeeze up to retest 149.70, which is the 50-day and the 20-day moving average acting as a resistance as well, and as well as this minor range top of 22nd of November and 27th of November. Okay, so still maintaining that short-term bearish outlook on the dollar yen. Okay, lastly will be the Australia dollar. So the Australia dollar right now is right now facing some weakness ahead of RBA meeting that will be up later at 11:30 a.m. Singapore time. So still looking at that 65.95 slash 65.70, which is exactly where is the 200-day moving average now acting as a support level. So as long as this support level potentially still holds, potentially there could still be a chance of the Aussie dollar staging another round of rebound to retest 67 figure level, which is very close to last Friday's swing high, which is at this 66.88. So what 67 figure level? So 67 figure level is a psychological level, and as well as this former minor range support, former minor, if I go to the daily chart, okay, so that was the former range support level that I draw from 13th of October 2022 low, 29 May low taken out, breakdown now turns into a pullback resistance exactly at the 67 figure level. All right, so that will be the resistance level to watch for today to maintain our short-term very bullish outlook, bullish outlook on the Aussie dollar as long as 65.95, 65.70 short-term pivotal support holds. But however, a breakdown below 65.70 potentially could kickstart a minor corrective pullback towards this 65.20 slash 65 figure level, which confluence with the upward sloping 20-day moving average as well. Okay, now moving on quickly will be gold price. So still recall that those who follow us in our daily dose of market insight yesterday, we actually flipped to a bearish bias on gold. So this is a daily chart on gold, but right now it's actually fast approaching a short-term support at 2030 yesterday. So going forward, if you look at the gold price on the hourly chart over here, is that yesterday we flipped to a bearish bias. So the bearish bias support level has been made 2030/2018. So with that, it's also coming very close to the 20-day moving average as well. So right now the 20-day moving average is actually right confluencing at this 2006 pivotal support level, which is also the ascending channel support from 6th of October 2023 low. So with that, I'll be using 2006 level as my pivotal support for today. Flip back to a bullish bias. First resistance to watch will be at for sure 2067, which is very close to the previous all-time high at 2075. So if this level is being surpassed to the upside, potentially we could see a renewal of another round of bullish upleg for gold, heading towards the next resistance at 2026. So that was close to yesterday's high or swing high level before that corrective pullback takes shape. Okay, so flipping to a short-term bullish bias again for gold, given the fact that it's now coming very close to a key support level at 2006, and also that corrective pullback support zone 2032 2018 level zone has been made yesterday. All right, but however, an hourly close below 2006, then this short-term bullish outlook will be invalidated to see the continuation of this corrective pullback heading down towards the key support zone of the 20-day moving average and the 50-day moving average, confluencing at the support level at 1955. Okay, so that's for the gold outlook. Flipping back to a short-term bullish bias as long as 2006 pivotal support holds for spot gold XAU/USD. So what's next for oil price? So West Texas crude yesterday returned neutral given the fact of a mixed element. So with that right now, what we could see is that potentially there is actually a bullish divergence that's being flashed out on the hourly chart on West Texas oil. So with that, I'll be using 72.40 as my key short-term pivotal support level. Looking for at least a bounce within this range configuration that has taken shape since 14th of November. First resistance 76.70, which is so confluence with this downward sloping moving average and the congestion area of 29th of November and 1st of December. But however, with an hourly close below 72.40, then this bearish bias should continue potentially towards the next support level at 69.60. All right, so with that, that's pretty much sum up with the short-term daily outlook on short-term technical analysis daily outlook on the broad-based asset classes that I want to cover. So before we go, let's take a look at the economic calendar. So I mentioned earlier, 11:30 a.m. there will be the RBA interest rate decision. No change for now, 4.35%, despite that recently the newly appointed RBA Governor Bullock sounding rather hawkish. She's actually indicating that domestic inflationary pressure has not subsided in Aussie in Australia. So do keep a lookout at 11:30 a.m. Also the statement that is accompanying the decision outcome that will be released shortly after 11:30 a.m. as well. So no change for now in terms of the expectation on the official cash rate at 4.35% after the previous month's 25 basis point hike. So throughout the session over here, we have another important data out from US will be the ISM Services PMI data, more important than the ISM manufacturing data. Why? Because the US economic growth is primarily driven by the services sector. So market is actually expecting almost unchanged at 52 level. Still within the expansionary mode, slightly above last month November level of 51.8. All right, so with that, that pretty much sum up for today's daily dose of market insights. So have a great day ahead, and we shall speak again tomorrow. Thank you.